We have drilled about 75,000 meters, going quite aggressive exploration for the next 2-3 years at least, running 2 or 3 drill programs in parallel. We have railway, we have power lines, we have seaports and airports close by, international ones. We are just a few hundred kilometers north from Sukari. Now recently, Centamin was bought out by AngloGold Ashanti, like 2.5 billion. Sometime before the end of 2026, we want to start production. So we have always thought of ourselves as being capable of building another Sukari.
All right, today we're having a discussion with Tonno Vahk, the CEO of Aton Resources, a highly interesting precious metal explorer in Egypt who is continuously finding really high-grade rock, just like this, in the Arabian-Nubian Shield. That area of the world doesn't see a lot of exploration activity currently, which just might make it an interesting speculation opportunity for you watching. Or at least that's what I'll try to figure out today. So thank you, Tonno, for swinging by. Welcome. Perhaps we can start off with a short and sweet high-level overview from your side.
Yeah, always happy to talk to people interested about our project, even though we are not actively promoting or selling ourselves. It's privately financed mostly, despite being listed. But always happy to talk, as we are very excited ourselves as investors about this project, especially now at this stage. And then we see a lot of very interesting things happening in the next few years. So the company was founded in 2007 already. Aton Resources, what was then called Alexander Nubia by founders. It received concession agreement with the government of Egypt. It's actually a law in Egypt adopted by parliament, so it's a very strong document, which has been very good because all through those turbulent times in Egypt, we have had revolutions and different difficult periods. The company has been continuously working, exploring on the concession area in the Central Eastern Desert in Egypt. Concession is called Abu Marawat concession. It used to be a few thousand square kilometers in the very beginning, but over the time some unneeded parts have been relinquished. So eventually, after all those years of exploration, we have drilled about 75,000 meters. About $40 million as equity has been invested into this company, into exploration. The beginning of last year, about a year ago, we finally got to a moment where we proved our commercial discovery to Egyptian government. We showed them that we can start mining gold on this area, and they granted us a 30-year mining license, which was sort of very important step for the company, but also for Egypt, because it's the first gold mining license they have issued to any foreign company in almost 20 years after Centamin got their license. So it's a very big step, and as we know, Centamin and the Sukari mine is one of the top 10, top 15 mines in the world by output. So we are just a few hundred kilometers north from Sukari. We enjoy very good relations with Centamin, and now recently Centamin was bought out by AngloGold Ashanti, so about like 2.5 billion. So we have always thought of ourselves as being capable of building another Sukari. Egyptian government believes in that, so they really need us to succeed. So our goal now is to get to production as quickly as possible, and this is not so hard to do because the first starting project is simple. Initially planned to be a heap leach operation, but now we have come to agreement with government, so we'll put a bit more money into capex and actually use a modular CIL plant, which is much better for everyone. It provides more profit, more recoveries, and much better environmentally, and everybody likes that much more. So our plan is to now finalize feasibility study, which we are doing now, and I expect this to be done by the end of the year, maybe even 6 months from now, and then start construction of the modular plant, CIL plant, which should be put into operation in the second half of next year. So sometime before the end of 2026, we want to start production of gold at Hamama, and Hamama is the first project into operation. We see about 4 or 5 year mine life at Hamama. It's a small project, maybe 20,000 ounces approximately annually, plus a lot of silver. But it's very nice, very profitable, makes us a mining companies. We can start making positive cash flow that would support the rest of the development, and ticks all the boxes for Egypt as well, who really wants to show that another mining operation has started. So this we expect to do now. We don't see any big obstacles here. Our agreement with the government, or the concession agreement, is based on a profit sharing model, which means that it's similar to the old style oil and gas agreements, and Centamin has the same kind of agreement, which means that we will invest all the money, we will recover our costs, get our investment back, and then the profit is essentially split 50-50 with government. It's a good deal, especially with nowadays gold prices. It's very nice. Basically, keeps us quite calm because we are in the same boat with government. Their interests are exactly aligned with ours. Them being 50% equity partners in this joint venture means that any permits they need to give, they're giving them to themselves, and we don't see any problems. And even though there is not much environmental issues in the desert, it's very nice, free of people or vegetation, so it's easy to be handled, easy to be mined. We have all the resources that we need. We are very fortunate because we are logistically well placed in the Central Eastern Desert. We're close to the highway which runs from Safaga to Quena, one of the biggest highways crossing from Red Sea to Nile. We're just 20 minutes off the highway. We have railway, we have power lines, we have seaports and airports close by, international ones. Very importantly, we are finishing water drilling for the feasibility study, and we have identified groundwater, which is of course crucial for mining operations. So this is roughly what we're doing now regarding starting mining, and at the same time, while we have mining license now secured for about 60 square kilometers for 30 years, which includes Hamama and other project Rodorin. Then additionally, we retained about 255 square kilometers of retained exploration areas, and those areas are actually much more important to us than the small starting projects, even if the first ones cover our market cap by multiples, but in profit. But the retained exploration areas is where the big value lies in, and we are now going quite aggressive exploration for the next 2-3 years at least, running 2 or 3 drill programs in parallel, and from those areas we expect to upgrade our mineral resource estimates significantly, and also then after that, as we have agreed with the government, we can bring those areas as which ones we like and want under the same 30-year mining license. So they would be entered or developed into production the same way through the same joint venture with government. And there are areas like Semna, for example, which is now probably the most high-profile target there after our drill campaigns, which have shown really world-class drill results last year and the one before last. And this Semna deposit is nicely located in the center of this area, so that's why we have thought and talked about putting there a centralized permanent CIL plant of a much bigger size than already, which could then process ore from all the neighboring areas. And yes, this hub and spoke model. So a central plant at Semna would have all what it takes to be developed into a big world-class mining operation. And Semna itself is still open width and depth, and we look forward to do more drilling there. So it shows an average grade of 8-9 grams per ton, and really is very interesting. It used to be old British gold mine in the beginning of 20th century, 1904, 05, 06. Brits were mining gold with notoriously high grades at the time, and also there have been of course, a lot of this ancient gold mining from the old and new kingdom and what have you there thousands of years ago. And now lately in the last periods, we have seen a lot of illegal mining on our area as well, which demonstrates the high grades. People with artisanal methods can really make money, but now we have cleaned our territory from illegal miners. So this is not a problem for us, but it more like has maybe even identified some targets for us, having those people do their operations. So Semna is a very high profile target, and we are just now finishing RC water drilling, as I mentioned. So we will move the RC rig to Semna, and then we will start another drill program there in a few weeks. And at the same time we are doing diamond drilling at Abu Marawat in the upper right corner, where also we're seeing great results. And then there are some targets on this retained exploration area, which we have yet not had time to drill, but we are very excited to go there and drill as soon as we can. Places like Bacchus, which is also an old British gold mine, and Portlog and other places where we have had very high surface samples, good results. So
thank you for that great overview, Tonno. So many threads I would like to pull. Let's first go to Hamama, which is of course the mine you started talking about, the one you want to start up. You're doing studies on it as we speak. Perhaps we can talk about what type of timelines we should expect there. When should we expect the results of those studies and to go into production? As well as what type of figures should we think about regarding startup cost?
The feasibility study is done by Wardell Armstrong from London, and they are well underway. So, though that's why I think 6 to 9 months, and we should be able to complete it. And financially, it would take about 2-3 million of costs. And after that, we are ready to enter the construction of the modular CIL plant. We are looking at different options to source the plant now, different producers. The CIL plant would be of a size of 750,000 tons of throughput per annum. Small size, I suppose, but it is just a perfect fit for Hamama as it is to process the oxide cap material at Hamama. So when we're talking about this cash flow plan that we have, we only talk about the oxide material on the top. We're not going into sulfides. This is another additional potential, but the oxide material, yes, shows that we can produce about 20,000 ounces a year roughly, and there's a high silver content. About 15 to 20% of the revenue will be actually silver. And yes, the capex of the modular plant is about $60 million. So that is something that's the biggest outflow from the company now before we start production. So that's why we are having talks with a few partners and as well as banks, development banks here, to see how to finance that most efficiently. But the moment is when we enter final agreements is probably after the feasibility study has been completed. So we'll see what the most optimal way to finance that is. We can also cover that partly, at least, with our own equity.
All right, thank you. Great overview there as well. Then perhaps we can dive into the hub and spoke model once again. Of course, Hamama, the mine with the modular CIL plant, would be a springboard towards this model. Yep. What would be the timelines for this? When should we expect more work in Semna to get us into production at some point?
Now that we start another drill program at Semna, I am not 100% sure if that drill program will be enough to convert Semna already into indicated resource. What would be probably necessary to pull it under the mining license. But maybe we do more drill programs at Semna. In any case, we want to reach the upgraded resource and indicated resource at Semna and Abu Marawat in about year and a half. So after that, this would be included in the mining license, and we can actually start the final feasibility study. So in our conservative plans, what we presented also to the government, we have gone a very simple way by using the same modular CIL plant that we are going to put up at Hamama and transport it after Hamama to Rodruin, run another 4 or 5 years there, and then proceed with the same plant to the rest of the territory. Of course, in real life, we would want to start building a parallel plant and operation at Semna right after we get so far that the resource is confirmed and the feasibility study completed. So in reality, we could also get to that probably in 3 or 4 years. Well, we will see how it goes, how quickly we can move. It depends on how much capital we have available, when exactly Hamama starts producing, and what is the sort of financiers' appetite.
All right. Thank you for that overview as well. I would like to transition towards the joint venture. We actually spoke about this behind the scenes. It's a 50-50 with the government and you. How does that work? Does the government also help finance, or what is the status there?
This is the type of agreement that Egypt has used for a long time in oil and gas sector, and it's a profit sharing or production sharing agreement whereby any production is handled by a joint venture company by the contractor and government, 50-50 equity partnership. So the same structure is used by Centamin. They have the same kind of agreement like we have. So in our case, as soon as we got to a point where we proved our commercial discovery and our mining license or exploitation lease was granted, we also immediately founded the joint venture company. It's called Abu Marawat Gold Mines. It is now existing, 50-50 owned by Aton and government. It has 8-person board for people from both sides, so it's entirely 50-50 partnership. And some people, of course, might view this risky, and by no means it's not a usual way to run a gold mine. So foreign mining investors, that is one of the reasons why Egyptian mining sector has been not developing so far, because this is not something that investors are accustomed to. In our case, we feel quite comfortable with the structure because our interests with governments are extremely well aligned, them being the partners. All that Egypt wants now is to get us to production and to start making money. They need this badly. The economic situation is not too good, and additionally they would really benefit by demonstrating to the rest of the mining world that, see, another foreign mining company has started production. They are doing very much now to try to attract foreign mining investors into the country. They have huge goals to multiply this sector in the GDP by 5 or 10 times by 2030 or something. And the new law has been adopted, and the new minister is very aggressively promoting Egypt. Very good guy, came from the business sector for the first time. So Egypt is working hard, and that's why we feel very strong tailwind now politically as well. Everybody is very motivated to help us to put this project into production as soon as possible. But government is not investing. They only have their 50% profit share. So whenever we recover our investments, then they will also get their share in profits.
All right, great. Thanks, Tonno, for highlighting that collaboration with the government. Mm-hmm. I would like to transition towards your ownership, actually, of the company as well as your partners. Of course, you own well over 75%. Could you outline how that actually works and perhaps also how that came to be?
I guess for now, Moonrider owns about a little bit over 70%, and my company Hectic have something like 17 or so. Moonrider is a company of my partner. He's the high net worth individual investor from Estonia, whom I have worked together for many years, over 10 years, and I run his family office, and we have other private equity investments in Central Eastern Europe, a lot of real estate investments in different countries, ex-Soviet Union countries, as well as Ukraine and Georgia, for example, and we have a lot of different businesses in Baltic countries. But this project came to be, yes, so that we had actually some mining investments in Armenia years ago, and a partner, Canadian mining professional in the sector who was at the board of Aton at the time. So he introduced this company to us, and then we came in and working with this company for years now, and really now taking it as one of our most important projects. So most of my time goes to Aton right now. Being a CEO, I do not have a technical or geological background. I have financial background. I've done a lot of fund management. I run my own hedge fund for many years. But I have very strong technical and geological team. So the people on the ground in Egypt are very professional. We have widely recognized as the best exploration team around in Egypt, headed by Javier Orduna, our chief geologist. So the exploration work is very high quality, and also we have other people working, like country manager Sharif Barakat. Now the ownership is indeed almost 90%, which makes the listing or the free float on Toronto Stock Exchange very small. There's not much liquidity or trading for that matter, but we've never contributed efforts or resources on trying to promote the stock or sell ourselves or hype. It's not our style. So we look at it as a project that we need to take from the beginning to the end and really add value. So whoever sticks around with us as small shareholders will get the same payout as we do one day when we reach a successful exit, or maybe simply re-rating after we start the actual production and we become a mining company and we upgrade our resource significantly, I think the market would notice, even if it is in such a bad state for junior companies right now as it is.
Yeah, thanks for taking us along there as well, Tonno. And of course, there's huge benefits to having a large insider ownership through aligning incentives with investors, as you and your partner are enormous investors in Aton Resources. Of course, there's also negatives that you highlighted, lower liquidity. Now that you are going in towards a development story, should we expect more outside capital, or do you think the company will remain to be mostly funded privately and through for example, a joint venture or whatever?
I think all those options are on the table. For the very close term future, like 3-6 months, I believe we will continue with our own equity, but then the moment comes to decide how to finance the actual construction of the plant. I am in talks with several financial institutions and private investors, strategic investors, development banks are very interested, like EBRD and others actually want to finance such kind of projects. So we will try to find the most optimal way for the company. Yeah. So it might mean that there will be a strategic equity partner taking a significant stake, but it might easily be that there will be no dilution at all, and we find some sort of debt or hybrid financing solution or mezzanine.
Makes sense. All right, Tonno, I think we have created a great first impression of Aton Resources. Thank you so much for your time.
Yeah, very, very welcome. Nice to do that.